So we got feedback as part of this round that this was some of the best customer feedback investors have heard on any software product in any category they've looked at across like years and years of data, basically. I think every CFO or controller on this podcast can probably resonate with some bumpy experiences they've had at some point with any of these legacy players. It's like, ironically, you lose a lot of data granularity, and it turns out to be just like a quote unquote dumb database. I'm sure folks on your podcast will have heard about this as describing a ledger these days. What turns out with LLMs, an LLM or an agent is basically a sophisticated human or CFO on steroids. So it's like even more extreme. The cleaner the data is, the better the information is. And we see that with the agents that we're building, the more impactful their work results are. We have a customer on our platform. They're in the 100 million plus range of ARR by now. And they run their whole accounting and finance stack on Rillet with, I think, 2 or 3 people, basically. And I do think we have a shot here where you can run $500 million revenue run rate company with like 2 or 3 accountants or something like that.
Welcome to Tech Finance. I'm your host, Sasha Orloff, repeat founder and current CEO of Puzzle, and self-professed finance nerd. On this show, we dive into the pulse of B2B fintech, from newly funded startups transforming the office of the CFO to major industry shifts, deals, and partnerships that are reshaping how we think about finance. You'll hear the most important developments, essential analysis, and of course, AI innovations. This show is brought to you by Puzzle and the Turpentine Podcast Network. Let's dive in. All right, everybody. If you are on a finance or accounting team and you haven't met Nick from Rillet yet, you are in for a treat. And not only did Rillet just raise $25 million from this small venture capital firm called Sequoia Capital, but I think once you hear this conversation, you're going to understand exactly why they jumped in. So this is a real treat for me because I first met Nick at the Jefferies Office of the CFO conference in San Francisco. And what turned into like a hallway bump, and you can't miss Nick because he's usually in a Rillet cap all the time, although here I see him in the Rillet shirt, basically just sat on the side for probably an hour, even more, just talking about it. And it is like immediately clear to me that this guy's a real deal. You are passionate, sharp, and you are like genuinely obsessed with fixing accounting software. So I think this is going to be a fun conversation, and I'm ready to dive in. So, Nick, welcome to the show.
Thanks for having me. I'm excited for this.
All right. So for those of you living in a rock and never looking on the internet and have never been in this, which is not going to be people listening to this podcast. But anyway, if you're just hearing about Rillet, like just here, give us the quick pitch. Like, what are you building and who's it for?
Yeah. We're Rillet, Rillet.com. We're building an AI native ERP for mid-market companies. So that's basically for businesses that are outgrowing QuickBooks or Xero, or folks that are just ready to move to more modern alternative than NetSuite or Sage Intacct. So that's sort of us in a nutshell. We have some of the leading AI companies, software businesses, professional services business on the platform today. And very excited to share our story here.
Cool. So you've worked in both fintech and then traditional finance. What was this like the personal either pain point or insight? Like why was Rillet needing to exist right now?
Yep. So I think to every, and Sasha, you may resonate with this too as a founder, like to every founding story, there's some sort of rational pain point that you've had and that kind of want to solve and kind of fix one way or another. And there is also an emotional side to why you're embarking on a 10, 15 year long journey, basically, to build. So for me, the more rational side of the house is I was part of a very successful European neobank called N26. We went from 0 to 100 million in revenue in like 4.5 years, including some of the finance functions there that rolled into me or that I worked with at the time. I was a typical startup. You had like 10 different hats at all times. And I waited weeks and weeks for any sensible financial information on our business because we had multiple different ledgers, multiple different geos, et cetera, et cetera. From there, we went into an RFP that kind of officially looked at the landscape of systems. And that's when it hit me that the status quo is just like, let me actually be a bit more, for the legacy folks listening to your podcast, maybe a little less polarizing, but it's just like, it's very evident that there needs to be a more modern tool and solution. I think every CFO or controller on this podcast can probably resonate with some bumpy experiences they've had at some point with any of these legacy players. So that was sort of the more rational side of the house. And then more emotionally as to why as a founder, you then decide to like, just go for it because you're building in a similar space, but for the SMB, you need a lot of like stamina and determination to kind of push through what is a real sort of complex build. And there, I think the 2 things that really help us as a team is number 1, we're all accountants and finance folks by background. So we're just intrinsically really interested in what we're building. We love it. It's just intellectually really stimulating. There's nobody you can ask on how to build a GL. There's no teams really that have done this in 20 years. So that part really keeps us going just intellectually. And then also, I think it's just huge impact. If we deliver on the promise that we're working on, the 0-day close, we will literally change your whole industry from the ground up. And so that's sort of the other piece where just like, if you're successful as a founder here, you will have literally made hundred thousands of people's lives, all these businesses' financials so much better, which is really inspiring for us as a team.
I was gonna go right into, going right to the GL is like a bold and crazy move. But I actually, based on your answer, let's reverse this. What does a 0-day close actually mean? That probably then will instigate how you took the approach that you did.
Yeah. So for us, there's a lot of noise in the accounting and finance category. Generally, there's all these tools, new tools running around, promising a bunch of things. For us, the early insight that we had, which was frankly very counter the grain back then, was like everything starts with clean accounting data, basically. If you have good integrations on how to pipe this data in, if you then have good review workflows, whether that's a human or AI, to clean, sanitize, understand that data, then a lot of the upstream reports that, your fancy execs want to have or the CFO or the board wants to have is kind of a side product, frankly, of your work as an accountant. So I have that insight early on through my experiences at N26. And then at some point, if you believe in that insight, it is more of a, do you have the courage to actually go build it? But it is really, especially in this era of AI, kind of proving right that clean data at source is really valuable, even more so in sort of this AI first world. So hence we pulled the trigger, quote unquote, on this idea of building a GL from the ground up.
So, God, my mind is racing in so many ways. And obviously, I'm close to this problem and understand the complexities of most, I think, people in the startup world start by building on top of another GL. They don't go directly into building the core GL from scratch, from the ground up. How did you think about, the approach? Because it's both complicated and expensive, and it requires a lot more upfront investment. How did you think about sort of the first version of your product, maybe?
So for us, there's two insights in there. One is a bit counterintuitive, so I'll leave that for the second point. The first point is that if you believe in the thesis of clean data will basically enable all this type of automation, you will very quickly realize, having worked with these tools or like speaking to people, you will very quickly realize that the GL, ironically, in the current status quo, like the NetSuites of the world, for example, they're ironically not the source of truth for your financial information. And also the data living in some of these systems is like aggregated through multiple different versions of, I don't know, Snowflake, calculations or exports and dumps and CSV uploads. Like it's like ironically you lose a lot of data granularity and it turns out to be just like a quote unquote dumb database. I'm sure folks on your podcast will have heard about this as describing a ledger these days. And so that's sort of one insight behind this, that if you build on top, you're kind of always hamstrung by the data quality in these systems that you can control, and always hamstrung also by APIs, which I'm not sure you maybe not as close to NetSuite's APIs and these type of systems, but they're really old and hard to work with, basically. So that's sort of the insight number one. That's maybe a bit more common. Insight number two that I was a bit of a bet at a time, frankly, but is really proving out to be right is if you own the data syntax, if you own the GL from the ground up, it's actually a lot easier to build features and functionalities. Because what is a good example? Deferred revenue and revenue recognition. Because we own the GL infrastructure, we can control which objects get generated as subscriptions or contracts to what upstream systems at Salesforce or Stripe. We own that end to end. Actually, even though it's maybe complex at first, it then allows us to ship and iterate much more quickly to build on top. And so that's proving sort of out. And maybe you see the same thing with your product, Sasha. Like it's a long upfront investment and you need to have a good story, get capital for that, get talent for that to get it done. But once you're sort of on the upswing, it's actually a lot faster and easier to iterate. And that's sort of like panning out for us over the last 1 year or so.
I mean, there's a lot of what you're saying is reminiscent of what we hear Parker Conrad from Rippling saying in the days. Like if you don't own the syntax, in which case he called it I think the employee data model, it's hard to really build the true innovation that it takes to build a breakthrough type of product. What was it around the why now moment? I mean, so I understand why there was a problem in the market and understand why you were frustrated coming from a background in accounting and having to do an RFP and getting pitched by, grandfather versus grandfather versus grandfather technology. But why do you think it was like this moment? Well, actually, when did you start Rillet?
We started really at the end of 2021.
End of 2021.
Yeah. I think I was as good sort of the why now as to, yep, it's a very common question. So there is basically two elements of that. So number one, we started the company, if you like, go by textbook, pre-ChatGPT, OpenAI era.
Yeah.
And so the insight that we had back then was very much, again, revolving around clean accounting and finance data, owning the ledger will make a CFO like 10x more powerful to reporting, automation, everything else. Fast forward now 2 or 3 years, what turns out with LLMs, an LLM or an agent is basically a sophisticated human or CFO on steroids. So it's like even more extreme. The cleaner the data is, the better the information is, the more impactful, and we see that with the agents that we're building, the more impactful their work results are. So that's sort of one thing as to why now is really accelerating. But back then, the why now was, yeah, so the insight behind accounting as sort of like the foundation for the data and sort of with all the integration points and the new software being built, there was a lot of data available. So I think that was one. And then back again, pre-AI, and the other pre-AI why now was for us very much the ability to build a GL was so much more easier because the ramps, the Brexes of the world would kind of take out one side of the equation. So you would focus very much on revenue, multi-entity consolidation, all these things, but you could at least quote unquote skip or just integrate on the AP side. And that's another unlock where I think the new ERP may not have as much core AP functionality in the platform itself, which help with building the platform with a small team.
Actually, on the point of small team,
Mhm.
when I think of my last companies running, we had a 15 to 20 person accounting and finance team along the way. Do you think that era is done? Do you think there is just this shifts in the market to the ability to operate not just with a better product, but also with a leaner team?
Yeah. So I think the future of the finance team is the accounting and finance team of 1, 2, 3, 4 people, like super lean. So, for example, we have a customer on our platform, YC company that's grown a lot since then. And they're in the 100 million plus range of ARR by now. And they run their whole accounting and finance stack on Rillet with, I think, 2 or 3 people, basically. That's it. And their close, thanks to our software, went down from like 10 people, multiple different legacy products to like 2 to 3 days. And that's, I think, is the future. People will just want to run a lot leaner. We speak to so many modern CFOs, like, give me the product that allows me to just run with a lean team. I don't want the management overhead. I don't want some poor soul reconciling some cash transactions for like every 2 weeks, every month. It's literally 50% of someone's time at times. I definitely think that's the future. Whether it's going to be an accounting team of one, TBD, I think that's a little bold, but like it'll be very lean, basically.
So this is like you hear Vinod Khosla talking about the NYC is like there's going to be multi-billion-dollar companies run by a solo founder with like vibe coding stuff. We'll see. I think there might be some need for some finance and accounting teams in there a little bit.
Definitely.
You can probably cut down on some HR if you're only a one-person team.
Yeah.
Along
Good point.
So we talked a little bit about, okay, so maybe like an innovation like a ramp allows for a bunch of like the AP functionality to be handled, and that makes it easy. What is it about the sort of legacy ERPs or GLs that you think the legacy players have missed in the days, right? You talked about some of the APIs, the legacy APIs, right? We've had multiple generations of API language. That sort of like makes a bunch of sense. Is there a bigger shift in the market that you think sort of is this wave that Rillet gets to ride?
Yeah, so I think at a very fundamental level, GLs or ERPs today have two flaws in their sort of design and architecture. For me, the integration points is one of the flaws they have. NetSuite, Intact is very known for relying on middleware, consultants, and a bunch of other sort of like in between solutions to pull any data from upstream systems in. And while that makes a ton of sense in sort of like if you built this company from 2000 to maybe even 2020, frankly, I don't think it makes as much sense today where with AI, you really need clean, well-organized upstream data to be in your system to help with the automation. So I think that's one thing. NetSuite built a mile wide and an inch deep, very heavily reliant on a bunch of middleware to customize your instance. Probably struggles a little bit in this sort of a new age where you need these native integrations. And then the other part for me is also workflows, where legacy ERPs have just not focused on workflows. They're kind of a database. They're the three statements in software as sort of a product. And so for us at Rillet, again, in the era of AI and agents and all these things, a lot of these workflows that traditionally happens outside of the ledgers because it didn't support the functionality will start living inside ledgers. And that can be simple things like deferred revenue, revenue recognition, but also like much more unique things like predicting accruals or agents going through just transactions, like summarizing certain pieces for Vortex and things like that, where I think that gets a lot more enabled in the GL because the data lives there.
All right, let's try and like bring this to life a little bit more, because it sounds like we see this stuff in the press and we see these stuff in like headlines. But can you walk us through like a real world example where a finance team is using Rillet and seeing accuracy gains or time gains?
So I mentioned one example before of a team literally consolidating as the company postscript a 10-day close into 2 to 3 days with our software. Why does that happen? Multi-entity consolidation. So you have multiple entities living in different systems, different currencies need to be consolidated up. Same with all the supporting schedules that traditionally live in outside systems like prepaids, fixed assets, and all these things. I'm sure your listeners will resonate. There is like an Excel spreadsheet or Google Sheet that supports the journals that will go into a QBO or whatever other system it may be. So that's sort of one piece of the equation. And then the example that I'm really proud of as well is Windsurf. It's a team of literally 2 people. It's one of the fastest growing companies in the world. They're adding insane amounts of ARR. I'm going to obviously skip the details here for confidentiality purposes, but they're adding insane amounts of ARR every week to their basically platform and stack. And you have 2 people with the help of Rillet reconciling and keeping that ship basically going at that speed without hiring any additional headcounts. And so specifically there, it is hundred thousands of Stripe transactions running via Stripe into Rillet, getting auto-reconciled, auto-booked, helping with deferred revenue being then calculated off these transactions and invoices and subscriptions, including ARR tables. So it's really tactical and tangible help that these teams are getting that traditionally would have taken literally weeks per month to do, that the software now does. So you can run a team that lean of such a fast-growing company with 2 people.
Hey, we'll get back to the conversation in a moment after a word from our sponsors. All right. One of my favorite tools that I use and we use is Notion. Notion is used by thousands of startups around the world as their connected workspace for everything from engineering specs to new hire onboarding to fundraising. Notion has a special offer for listeners. 6 months of free Notion with unlimited AI, value of over $6,000. So you can access the limitless power of AI right inside of Notion to build and scale your company and team with one tool. Get 6 months free of Notion with unlimited AI, along with custom templates when you apply for notion.com/startups/puzzle. Once again, that's notion.com/startups/puzzle. Go for it. Building a company is hard enough. You shouldn't have to second guess your numbers too. One day, an investor might ask you a question that you just can't answer. The next, you realize your books aren't as clean as you thought. Sound familiar? Puzzle is rethinking accounting from the ground up with an AI-first ledger that eliminates repetitive tasks and gives you real-time financial clarity so you can focus on running your business, not fixing spreadsheets. Accounting should work the way you do, fast, intuitive, and built for the future. Come check us out at puzzle.io. So I'm sure over the past couple of years, your customers, you've built a bunch of whether it's AI or automation or agents. Maybe a two-part question. One, what is the feature that your customers tend to tell you they like the most, either in a demo and they're like, dude, get me on this board. And then afterwards, what is your personal favorite feature? Because sometimes those things can be different. Sometimes as founders, like there's just some really cool little innovation that either hit a pain that we used to have to deal with or just you're really proud of.
I'll hit both of these. I think one will resonate probably with your listeners a lot. The other one is a little niche, but it's one of my favorites. So the biggest or the flashiest AI feature that we obviously have the chatbot experiences and everything else. Like they're cool. But what I like the best is the ability to build a custom report in natural language. And it is literally you go into the software, type what you want, show me all my expenses by vendor over time, or build me a report of all transactions that relate to a certain category or class in QuickBooks or dimension in NetSuite, and just pull that out. And you can literally type it in a sentence, refine it from there, and the system will still add like all the toggles and drop downs. It'll still like select things so you can then refine it afterwards yourself if you want to. But that is such an awesome use case where you can just traditionally literally spend hours building custom reports in these systems, reduced to minutes of building a report. So that is usually the flashiest one for folks that they get really excited about.
And then what about you?
So I like it is a small one, but I like one where for folks out there listening, if you are in your GL, you may use a Ramp or a Brex. You may use some other Expensify on an old credit card of your CEO, or like some cash transactions that need to be reconciled directly in your ledger and coded there. There's always like multiple upstream vendors that kind of get fed and created into your system. And we have a AI basically running over your vendor list at all times, suggesting little merges for you. So your expenses by vendor doesn't get bloated out by like 5 different versions of Microsoft, but it gets consolidated into just maybe the 2 that matter for you. And that's sort of one of my favorite use cases because I've just lived this pain so much, and it just creates for such better reporting clarity.
Oh, yeah, for sure. That's great. And at some point, we'll have to come back in a year and we'll ask the same question, and we'll see, because I think the world is going to change quite dramatically. And part of that is this new capital that you raised, which is going to let you accelerate everything you've been doing over the past couple of years to an order of magnitude. And if you follow Nick on LinkedIn, which you should, you are going to be drowned with the volume of features that they're shipping on a daily, weekly basis. So congrats on the $25 million round from Sequoia. Tell us a little bit about how this came together, because it's probably been almost a decade since people have said, or actually 30 years since somebody said, hey, we're going to build a mid-market ERP along the way. So tell us a little bit about how the round came together.
Yeah, I mean, it was a very successful round. We were fortunate enough to be able to choose basically who we'd wanted to work with, all great investors. And so for us, I told our team it was like literally an 8-day fundraise process. It was like insane in terms of how quickly it went. But what I told everybody on the team is like, this is like kind of a I wouldn't call it successful just yet. So we have so much bigger ambitions, but it's a little bit of an overnight mini success in the making for like 10 years, like, or whatever it was for us. It was like the proverb is called 10 years. I think for us, it was like 3 years and something, where just every action, everybody took on a team, every customer we made happy, every feature we shipped, every support ticket we resolved, kind of compounded into just a business substance in terms of just the raw metrics for investors, as well as the customer happiness. That was just phenomenal, frankly. And so, for us, that's I think what made the round so successful. So it wasn't necessarily like a cool founder hack on how we like quote unquote played the investor game. It was very much like we built raw substance into the company, and it was very visible to people. This was a huge opportunity for them to make money, basically.
I'm curious because I have a little experience here. A lot of investors don't have an understanding of accounting or a GL. They like do it at a high level, like what's ARR, which funny enough isn't even an accounting metric in and of itself, but like the core complexity. And so there's this sort of tension is like, well, NetSuite and QuickBooks have been such a dominant position for decades and decades and decades. There's been an angel funded challenger 2 to 3 a year every year for 20 years, and nobody has broken through. I don't think Sequoia has taken a bet on the space ever. What is it that you think sort of really resonated? What do you think they saw in Rillet?
Yeah. So for us, I think 2 things that really came through when we put together this round. So number one, it all starts and ends with like ridiculously happy customers. So we got feedback as part of this round that this was some of the best customer feedback investors have heard on any software product in any category they've looked at across like years and years of data, basically. So I think that sort of we are somewhat obsessed, I think one may argue, with our customers and making them successful and happy. And you can sense it in the team culture and everything. And kind of is I think one of the key metrics of success why it was just so evident that this team with like very little resources at the time could achieve something that literally hardly anybody has achieved in terms of just obsessiveness of customers on how much they like the product, how much of the value they get out of it, how much they like the team as well. So I think that was one thing that just came through as a sort of like a stark difference to maybe some of the folks that have tried this in the past. And then the other thing that was very important for folks to be educated on is just like, why is the GL important? It sounds maybe silly to some of your listeners are like obviously it's an important piece of technology, but to your point, investors are not as like in tune with all the nuances and details as to why this is an important category. And so what we're building in the context of agents and the vision we have there on like how agents and humans will collaborate as part of like the Rilla platform and what we're building there is just quite inspiring, I think, in this day and age where you could really like squint and realize, okay, this team with these kind of customer happiness combined with like an awesome product that has all the data and this type of vision on where this is going could actually make this happen. And I think the joint factor of this was basically enough to get some of the best folks to jump on the opportunity.
If we're trying to provide advice to founders out there, and the advice is like, just make your customers love you. And YC also, just Gary 10, all the YC, I was always like, if you make 10 people love you, it's easier to make than 100 people love you than having 100 people kind of mediocre love you. But in something as complicated as accounting software, or even in the early days of Figma, like that can be hard. And I know one of your investors posted like this was this was a bit of a challenging journey at some point, not maybe this round, but sort of the past 5 years or so, or 3 years. What gave you conviction that this was the right approach, and especially in like today's fundraising environment? What would you have done anything differently? What advice do you have for founders out there?
Yeah, I do think have like 5 customers obsess over what you're doing and be true like super fans, and then from there get the next 5 to 10, and then from 10 you go to 20. Like that is it's obviously insanely hard, and all founders out there, like I don't want to make it sound like it is easy, but it is possible. I think that's my sort of point. Like it is possible to do that if you just obsess over your problem, you genuinely care about your customers. Like a lot of founders out there, I realize this, and that's not a judgment or offensive, but it's just I think it's harder for them to succeed. Is they may not be as passionate about their customers' problems and pain points as some of the more successful startups are. Like we obsess, we love sort of the pain points that we see, and try and figure out ways we can help our customers. And so I think it's just a mix between like obsess over your earliest customers, genuinely care, and you kind of can't fake it to an extent, but genuinely care about the problems that your customers have. And if you do, I think you can build great things. And then you obviously need to have a bit of luck in terms of timing and everything else. But like it's really the customer obsession that's very much in your control. And you choose also what to work on that will help you kind of build a meaningful business in also harder fundraising environments like the one currently is.
So when you think about that, and you find your 5 and you find your 10 and you find whatever, how did you know as a founder that right now was the time for the next raise?
So for us, it was the signals were very clear in terms of like just the velocity at which things were accelerating in terms of just like customer inbound, customer demand on the product. We like it's a proverbial situation where you don't have enough people to absorb the volume basically. It's just awesome to feel like because you kind of read about it only in the news type of thing. So like I think it's the signals there were very clear, and then you could really squint and see under what we're building with the obsessive happy customers, again, all the metrics going in the right direction, where you could see we wanted to work with the best investors out there, full stop, because it is really important given the category we're in that you work with folks that like again a Sequoia who's like pixie dust kind of rubs off on you a little bit as well as a company and founder, where you could squint and see like, okay, this can become a category defining company. I really can equate the AI native ERP for the mid-market, full stop. Like what NetSuite is today really can become in the next 2 to 3 years. And at that point, it became very clear that this is a great opportunity to raise the next new round and kind of cement the stature and position that we have. And at that point, yeah, we initiated a process out of the interest we had.
And tell us a little bit more. What's the Sequoia pixie dust?
In my mind, it's just as I think two things on Sequoia. There are very mystique firms. Like a lot of people talk about them, and they have a different reputations and so forth. I think that my interactions with them were phenomenal. Basically, number one, they were the most diligent and hard asses in a good way going through the diligence process. Like, they were the most intense, asked all the questions that, like, frankly, 90% of other investors wouldn't get to. And that way gave us a hard time, but in a good way. Like, it was never, like, adversarial, but they were just, like, drilling into the points. Help me understand this. Help me understand that about your business. What about this analysis? We think about it this way. What do you think? And so I think that part was really awesome to see. And then they're just, like, highly committed. So they don't rest on their laurels, in terms of like, someone joked to me that these are the hardest working billionaires you'll ever meet, basically. Like, so it's just like all these people would have all the right in the world to just move on, check out, go to the beach. They don't. And they reply to your emails anytime over the weekend within like 5 minutes, basically. And so it's just like the combination of the intellectual rigor that they apply to problems combined with the hustle and drive that they bring to help you build the next category defining company that kind of is very much aligned with how I think and operate and run Rillet, frankly, but it's also kind of gives you another validation point externally as a startup as to why you're going to be successful.
Have you seen that catapult Rillet post close or post announcement in a way that you think is different than just money?
Yes. So I obviously don't have the A/B test, so like I can say yes, and I don't have the data, right? Let's be real. As accountants, we need to be fact grounded. But like, I do think there is something to it from a hiring perspective. We have a phenomenal team, but we have access now to talent that we wouldn't have had access before in terms of just like backgrounds, CVs, everything else, they may not be better, frankly, than our current team. So that's always the dangerous part, right? If you hire for brands, it may not actually work out that way. But like it's just like some of the top talent will give us a shot and or will choose us. We had like some really good AI talent sign up with us recently, and they had like literally 5 offers from other top tier venture-backed startups. And so the question is a little bit there of like, okay, it just gives you an extra validation and like an extra, you can send your Sequoia partner in to like go speak with the candidate, and it just has a great sort of like weight behind it. And on the customer side as well, we just have access to certain customers that maybe we may have not had as much access before because either they're Sequoia companies themselves and they want to support the portfolio. There's a very strong camaraderie there, or also alternatively, just like again, some of the bigger companies just know the Sequoia brand name that they may not know as much as with some of the other funds. And so that has helped us at least on the BD side and candidate side. It's not day and night. It's maybe 10% or 15%, but you get any advantage you can get as a startup because you're still going against the Goliath that has like a 20-year head start in our case.
So what does success look like over the next 12 to 18 months? What are your next milestones?
More of the same. I know that sounds boring, but like more happy customers, build out the team to support even happier customers, even bigger companies. So it's very much like do more of the same, do it relentlessly, consistently, do it at scale as well. Like it's very hard to like scale the initial ethos of the customer obsession and everything else to a company and team that is joining more recently, right? So I think that's one of my top focus areas as a founder. And then the other thing is on just the product side, there is so much opportunity in AI, and you probably see some of that with your own product as well. There is so many little use cases, agents you can build in 1 or 2 weeks. Like it's not like fancy big things that have huge impact on like on the customer, but may literally just be a 1 to 2 week build for you as a vendor. And so that's sort of like tapping into that potential, marrying up these ever increasing and better models with the data that we have. We have some very cool feature announcements coming out the next couple of months that I'm not going to disclose just today yet, but I'm really excited about that future.
When my last 2 companies implemented NetSuite twice, and I felt that pain like quite internally. But I remember I asked him like, why is NetSuite such a dominant player? And the answer from the sort of implementer was like, they have 15,000 Excel templates for every use case that you could ever think of. And I was like, wait, what?
Is that real? Yeah.
Yeah. It's like, all right. Actually, on that point, do you guys use NPS? How do you measure customer happiness? Because I think the point is worthy of a little bit more digging in. And I think a lot of founders out there and finance like don't spend enough attention to this. I know from experience, both from raising capital, especially sort of pitching Sequoia over the past 15 years, they do dig deep into customer obsession. Like, how do you think about customer obsession internally at Rillet?
It's basically 2 ways for us. Number one, numerically, that part is easy in terms of like, send out a survey, ask people the right questions. It's helpful and important to do.
What are some of those questions? Like, do you literally do an NPS survey or do you do your own version?
We just did one. I need to check with my head of CX, but I think it was either this week or just a week before, like literally in the last 3 or 4 days that people are filling in. Yes, we asked the NPS question and then try and ask 2 or 3 simple questions as follow-up. So basically make it easy for everybody's overworked, especially accountants. Like they have no time whatsoever, right? So want to make it easy
unless they use Rillet.
Unless they use Rillet, exactly that. But they also don't want to use that time to fill in our NPS survey, to be honest. So, but yeah, exactly. That's sort of one thing. So just the numerical question, and then like 2 or 3 simple punchy follow-ups. That's one. I read through every single answer as a founder that comes through. Basically, like this is really important. The qualitative feedback. That's one way of doing it, and we do that well through the team. And then the other thing is. It's a little wishy-washy, but going back to customer obsession and true customer care about their problems, you can feel it. You can viscerally feel it. Like if our customers have a problem with something during their book close and we can't solve it in just 12 hours, but it takes 24 hours, like I can feel the pain basically. And so can my team, or like, holy shit, this person is stuck. Let me help them with workarounds, blah, blah, blah. And also to the upside, like they're having a good experience. Like they will be shouting our names for the rooftop, giving us like shout outs in our Slack channels. People are hopping in, everybody's happy. Like you can, it's very personal to us in that regard, where like if something goes wrong, it goes really deep, and if something goes well, it also goes deep. We truly celebrate it. And so I think that's the second part to customer obsession, where yes, you can put it into a form and send that out on whatever cadence, but I do think you need the personal human connection to your customer and really feel and shadow your customer through their close cycle in our cases, or whatever software you're building, to understand what they like and dislike. And I think that's equally important than just a survey, basically.
I think that has to come from the founder. That culture has to be set at the top. If you're not obsessed with your product, and again, I'm back to quoting Parker again. Connery's like, he would do all of the interviews, he would do all of the setups like in the early days and review this stuff because he wanted to see where the problems are. He wanted to make sure the product was working. He wanted to find that next wave of innovation. You see these founders obsessed with their customer happiness, and it tends to be the early indicator of translating to these monster companies in a way where, not to throw a dig on, you probably can't, but when I was in the early days and talking with some of the NetSuite team, they were bragging about how they hadn't needed to hire a product manager in over a decade because their only competition was time. And if they needed to make more money, they could just raise their rates. And you were like, what about, like, the customers saying they had just sent this cease and desist to Airbase, which at the time was a darling of Silicon Valley. And they're like, who cares? I was like, well, don't you want to work? Like, people love this product. It was like the earliest spend management like startup. And they were like, who really cares? Does that make us more money? This is the HBS case study, like writing itself. And here you are with Rillet leading the charge. All right, we are over time as usual because I just love this stuff and get obsessed. So let's dive into a couple sort of like last questions. So for the finance leaders who are listening out there who might be burned out, what's your message to them? Why should they be paying attention to Rillet now? Is Rillet ready?
The alternative is NetSuite or Sage Intacct. So like it is half joking, half serious. But yeah, no, it's like, look, it's a really modern tool. You get an awesome software that helps you automate truly some of the minutiae, doesn't just talk about it, actually gets the work done. And you get an awesome team to support you with it that understands your accounting workflows. We're all accountants. We truly care about you. And so, yeah, give us a shot. I know it's always a little daunting to change out an ERP. We make that as seamless as possible, like an in-house implementation that we run ourselves as a team. But yeah, it's you'll feel it. When you feel it, give us a shout, and we're happy to see if we can be a fit for you.
Love it. And then for founders who sort of are building in complex, I mean, the question says unsexy. I obviously think accounting is quite sexy, but for in complex, maybe misunderstood categories, what's your advice for creating something that actually sticks and resonates with customers and investors?
So investors, you do need to paint a picture of like, okay, how large can this become? Often unsexy categories can become quite large, but you still need to have a pretty clear. Sometimes it's almost a curse if you build into too large of a category because it's like unclear on how you're actually going to own the category. So you need to have a clear sort of idea and thought process. It'll obviously change as you develop your company, but like on how to get there. And then on the customer side, just I think genuine care and interest in the problem. Like if you go after the hairy beast, only do it if you don't mind if 5 years later you haven't succeeded, but you learned a ton about the space and process, and we'll just build your next company off the back of that. That's sort of, I think, the litmus test. Like, do I care if in 3 years I walk out of this with nothing, quote unquote, rational in return, but you have all the learnings? If the answer to that is yes, it may be worth a shot.
Nice. All right, and last one, what's one thing you believe about the future of finance that you think others still don't?
I do think that humans struggle with exponential change in the world, frankly, including myself as a founder who should like theoretically be very used to exponential like changes all the time. It is just hard as a human to realize. And I do think we have a shot here at this current change of progress that we're in 2 to 3 years truly at a stage where you can run $500 million revenue run rate company with like 2 or 3 accountants or something like that. And I think that is very much out, like everybody even sees that, yeah, we'll eventually get there type of thing, but I think it may be much closer than people think. And obviously we wouldn't be building if we weren't excited about that future. But I think the progress is insane that's happening. So it may be much faster than people think.
I love it. All right. Well, everybody out there, check it out. Rillet.com, RILLET.com, and go follow Nick on LinkedIn. Of course, we'll link to everything in the show notes and all that good stuff to make it easy. Nick, thanks for coming on the show and sharing more. Congrats.
Thanks for having us. Thank you.
All right. Bye, everybody. Thanks for listening to Tech Finance with Puzzle and Turpentine. If you got value from this episode, please share it with anybody building or funding the future of technology. And please leave us a review wherever you're listening and tell me about what you want to hear more of. If you're looking for accounting software you'll actually love to power your company, check out Puzzle.io, the modern accounting platform for the AI era. Tech Finance is part of Turpentine, the awesome podcast network behind Econ 102 with Noah Smith, Turpentine VC, Complex Systems with Patrick McKenzie, and so many more.